Since the 1990s, companies have been trying to digitally transform their operations and how they interact with customers. The rapid expansion of technology, driven by the ubiquity of mobile applications and other connected devices, has increased the prevalence of connected consumers. Empowered by these technologies, consumers are more sophisticated than ever and are increasingly demanding seamless digital experiences. CI&T is a global digital services specialist and has helped companies adapt to these new demands since 1995, quickly gaining a reputation for providing digital solutions that delivered on both speed and quality. From its humble beginnings, CI&T now provides strategy, design, and software engineering services to enable digital transformation for the world's leading brands.
CI&T is a technology service company with a solid track record of continuous growth, best-in-class profitability, and a highly recurring revenue model with a strong net revenue retention rate. CI&T also operates with a very healthy employee retention figure. In the market of digital services, large enterprises and new fast-growing digital firms are facing challenges with digital transformation. The former struggle to innovate and quickly transform, while the latter struggle to scale their operations. To help these companies, CI&T combines digital strategy with customer-centric design and top-of-the-line software engineering to offer end-to-end solutions from the business opportunity to the hands of the consumers. CI&T combines these competences under one set of principles, practices and methodologies called Lean Digital, a methodology unique to CI&T that is a combination of the disruption of digital and the discipline and leadership frame of mind of Lean. CI&T generates business impact for clients across several geographies and industries, such as financial services, food and beverage, and pharmaceuticals, always focused on building strong client relationships that expand over time. Metaphorically speaking, giving giants nimble feet.
Hello and good morning everyone. Welcome to CI&T's second quarter of 2022 earnings call. I'm Eduardo Galvão, Head of Investor Relations at CI&T, and it's a pleasure to be here again to talk about our results. With me on today's calls are Cesar Gon, Founder and CEO, Bruno Guicardi, Co-Founder and President for North America and Europe, and Stanley Rodrigues, our CFO. This event is being recorded and all participants will be in a listen-only mode during the company's presentation. After that, there will be a question and answer session for analysts and investors only. If you'd like to submit a question, please send it via email to investors@ciant.com. The Q2 presentation is available on the company's investor relations website at investors.ciant.com. The replay will be available shortly after the event is concluded. Some of the matters we'll discuss on this call, including our expected business outlook, are forward-looking statements, and as such are subject to known and unknown risks and uncertainties, including but not limited to those factors described in our earnings release and discussed in the Risk Factors section of our annual report on Form 20-F and other reports we may file from time to time with the SEC. These risks and uncertainties could cause actual results to differ materially from those expressed on this call. We caution you not to place undue reliance on those forward-looking statements because they are valid only as of the date when made. During this presentation, we'll comment on certain non-IFRS financial measures to evaluate our business. Please refer to the reconciliation tables on non-IFRS measures in the appendix for more details. Our agenda for today includes an update on recent events, followed by some of our successful business cases and a few highlights. We'll then talk about our people and discuss our quarterly financial results. At this time, I'm pleased to invite Cesar Gon to begin our presentation. Cesar, please.
Thanks, Eduardo. Good day, everyone, and thank you for joining us today. During those last months, I could finally physically attend investors, conferences, and meetings, and it was good to meet many of you in person. We are excited to report a solid second quarter, demonstrating the resilience and consistency of our engagements with our long-tenured clients. We also continue to be disciplined in onboarding new clients every quarter to guarantee sustainable long-term growth. The demand for our services remains strong in all geographies and industry verticals we operate, and we continue to expand and diversify our inspiring network of tech talent worldwide. And I'm glad to announce another move in our programmatic M&A strategy. This week, we announced the acquisition of Transpire in Australia, a founder-led, award-winning technology consultancy company to accelerate our growth in the Asia-Pacific region. We are excited about the arrival of Transpire to the CI&T family and with all future possibilities it will spark. Since 2009, Transpire has been the trusted technology partner of some of Australia's most innovative organizations, including Vodafone, Virgin Australia, among several large companies. Headquartered in Melbourne, with team members across Australia, Transpire delivers digital experience across several verticals with a solid design-led, mobile-first, cloud-native approach. As part of this strategic acquisition, Transpire will add around 100 digital specialists to CI&T, further expanding CI&T's operations in the region. Transpire recorded 15.5 million Australian dollars in net revenue in its fiscal year, which ended in June 2022. The purchase price for this acquisition is 23.4 million Australian dollars. Previously, in late May, we announced the acquisition of Box 1824, a future-focused strategic consulting firm headquartered in São Paulo with around 40 specialized senior strategy professionals, helping Brazilian and global companies to design and implement their future. With their ability of detecting, decoding, and directing consumer behavior changes, the 3D methodology, they have been able to shape several industries, portraying an impressive client list, including names like Itaú Bank, Vivo Telefônica, Nike, Google, Disney, and Spotify. Box 1824 will remain an independent business unit, part of the CI&T family, to foster their successful business model and enhance CI&T's end-to-end digital capabilities. Now let me comment on the second quarter financial highlights. We are glad to present another set of high growth in revenue with solid profitability metrics. Our net revenue in the second quarter of 2022 grew 67% year-over-year, or 73% in constant currency, eliminating FX fluctuation. The main factors contributing to our higher growth pace continue to be the expansion of our engagements with existing clients, the addition of 17 new clients this second quarter with annual revenue above 1 million reais in the last 12 months, and our programmatic M&A strategy. Our adjusted EBITDA margin was 19.1%, 160 basis points higher than our previous quarter. Finally, we continue to expand our global talent network. We ended the quarter with more than 6.7 thousand CI&Ters, a net addition of 2.7 thousand employees in the last 12 months. That's a 68% growth in our headcount, in line with our top-line growth. This is our 24th quarter of consecutive net revenue growth, endorsing a business model that allows the rare combination of long-term high growth rates, solid profitability, and cash generation. Once again, I want to express my gratitude to all CI&Ters across the globe who have been dedicated to making this happen. Stanley will deep dive into our financial results shortly. Lastly, we are very proud of the business impact through digital initiatives we generate for an ever-increasing number of large and fast-growing clients in several geographies and industries. Regarding our revenue in the first half of 2022, 84% is from brick-and-mortar companies and 16% from digital natives. And to make this more concrete, let's take a look at some powerful stories with our clients, our data powerhouse, and some additional highlights.
Kraft Heinz has a dream. A world where desires. Don't end up on an empty shelf. Kraft Heinz Sales Tech Ecosystem. A system made to transform data insights in impactful business actions. Kraft Heinz Sales Tech Ecosystem is a digital and automated business management system that provides the sales team with the right data at the right time, with a single source of truth. It will increase revenue and reduce costs for all business units in the international zone, consolidating data and providing real-time information, while monitoring all the sales cycle, for better informed decisions, faster than ever before. This allows Kraft Heinz to increase business knowledge and establish a long-term data-driven partnership with customers, being present in every store with the right product. We're going to initially create an MVP, which is under development in France. Since this is an international agile project, the second workstream has already started in Brazil, delivering the sales tech ecosystem product with the same tools and other customized features for the Brazilian market. The plans are to continue the rollout into other key territories in the Kraft Heinz International Zone from September 2022. Expected outcomes: a more efficient and productive team, spending less time obtaining data and more time generating value. Forecast improvements that will generate more profitability and reduce costs. Better internal communication and alignment, increased customer satisfaction. Automate the processes and use performance reviews to accelerate decision-making. Let's make life delicious.
1 Million Opportunities, 1 MIO, was launched in October 2020 by UNICEF Brazil, offering quality education, connectivity, skills development, professional training, apprenticeship, internship, employment, and civic participation opportunities for vulnerable young people between 14 and 24 years old. With over 48 million, Brazil has the largest generation of young people between the ages of 10 and 24 in its history. However, 31% between 18 and 24 are unemployed, and 12,300 million between 15 and 29 years old are not in education, employment, or training. To design and develop an effective solution, we partnered with 1 Million Opportunities in its new platform. This work started by listening to different stakeholders, including the youth population as end users, and the public and private sectors. Features similar to social networks and a big bet on interaction were the assumption to engage people. To be fully inclusive, we learned about the needs that a vulnerable group faces, such as the need for offline resources, due to unstable access to a good internet connection, and the soft skills that employers most value. Through public-private youth partnership, the 1 MIO initiative has been scaling rapidly since its launch, and has created over 158,000 opportunities together with an ecosystem of partners from the private sector.
Imagine a drugstore. Now, imagine health. Box 1824, part of the CI&T family, supported RD, the biggest drugstore chain in Latin America, to expand its business vision in a disruptive way. The company is shifting from a drug retailer to a provider of healthcare services. Together, Box 1824 and RD define the company's new north, where a healthcare company also takes care of the planet and its people. With Box 1824, RD materializes a future where sustainability is part of the core business, not something attached to it. The companies are also able to build a future, in conjunction with behavioral trends, more health, more concern for people, and more care for the environment, and technological trends, such as digitalizing health services, to increase accessibility and reduce waste. Alongside Box 1824, RD is building its own future. And the future of the drugstores.
Nestlé has 100 years of history in Brazil and is present in nearly 100% of homes in the country. Such a traditional track record doesn't stop the company from reinventing its business strategy, using data to foster sales. Since 2019, Nestlé Brazil has counted on CI&T to co-develop data strategies. Together we created the Data Lab, an internal operation of data, engineering science, and governance that connects Nestlé data from multiple sources. New features, like the Product Recommender, are made possible by this connection. The Product Recommender feature uses artificial intelligence and machine learning to get raw data and convert it into valuable insights. Nestlé has better products to offer to retailers with data, enabling cross-selling. Sales reps provide products at the right time, creating a space for business growth for retailers, Nestlé, and its commissions. The feature alone increased sales by 6% over the first 6 months. Today, almost 100,000 retailers have access to this technology. The Data and Analytics Powerhouse was created to enhance business strategy and people capabilities to accelerate the maturity level in data. The Data Journey, an owned offer that engages our clients in a new approach to data, governance, and strategy, was developed by the Powerhouse. Globally dispersed, the Powerhouse is composed of a community of data specialists, digital strategists, and researchers widely committed to the value of data for business, people, and society.
Hello everyone, I am Gabriel Marostegan, Head of Data at CI&T and a member of Data Analytics Powerhouse leadership team. We built the Data Analytics Powerhouse on the principle of thinking globally and acting locally, with the goal of rapidly expanding our capabilities and results. Since the beginning, we have experimenting with the power of the crowd in communities, using their contributions and multidisciplinarity to create space for innovation. Today, we have over 600 people working in small groups around the world to share knowledge, create accelerators, research solutions, and prepare for the future. Our Data Journey offer, which aims to help our clients solve their data capabilities gap, cope with cultural challenges, and accelerate their data maturity, is proving successful. The secret sauce is advanced with data platforms, hybrid intelligence amplifying the power of human analysis through AI solutions, and data strategies driven by business impact. Recently, our R&D initiatives called Cognitive Lab, in partnerships with University of Campinas, achieved the Best Paper Award at the 24th International Conference on Enterprise Information Systems. In this way, we are accelerating our capabilities, impacting the market, and generating business results for our clients. This is how we help make their tomorrow.
Pride Month raised understanding and belonging in CI&T globally. It was an intense month, which is routinely the apex of a set of diversity and inclusion practices that find a bigger stage in June. Through internal dialogue, support for LGBTQIA+ parades, and an edition of Tech Voices, an event provided by us that aims at deepening talks from the perspective of vulnerable groups, we keep creating a safe space for diverse talents to grow. As a material result, we were named one of the 38 best companies for LGBTQIA+ professionals to work for by Mies Diversidade Institute, LGBTI+ Business and Rights Forum, and the Human Rights Campaign Foundation.
We are super excited to have Box 1824 as part of the CI&T family. With this acquisition, we are pairing together two very solid reputations.
of envisioning and accelerating the future in the digital space. We believe the corporate world faces two major disruption fronts: technological possibilities and behavioral changes. CI&T has a very well-known reputation in this first part. With Box now, we are profoundly strengthening our capabilities to create value for our clients.
Hi, I'm Paula Englert. I'm CEO at Box 1824. We are strategic consulting firms that connect brands and people to the future. From almost 2 decades now, we have been bridging this gap between the future and the present, helping global companies to better structure their business and their innovation process. Joining the CI&T family enables both to offer our clients a complete journey from envisioning the future to transforming these visions in business opportunities.
The Polar Route is a project by Beto Pandiani that aims to discuss climate change and its socio-environmental impacts by crossing the Arctic from Alaska to Greenland. Beto is a world-renowned sailor and speaker and, in this 8th crossing, will resume the partnership with Igor Belli, who was present in his other 2 crossings, the Pacific and Atlantic Oceans. CI&T supports this mission across the ice to evidence climate change and to instigate people about the need to think ahead. Even if it feels like we're all trapped in a sea of uncertainty, unlikely things can happen when entrepreneurship, innovation, and technology are combined, like crossing the Arctic to raise awareness of the rapid melting of the Arctic. All of this on a tiny catamaran.
The digital landscape is constantly evolving, and the way customers engage with brands is changing. Behavioral science, while at the forefront of communications in other sectors, remains relatively untapped when considering connected digital experiences. As part of London Tech Week, the leading event in Europe's tech capital, SOMO, part of the CI&T family, led the conversation with our own event.
I think behavioral science is going to be fundamental in shaping the future of digital products. I think it, without doubt, is the biggest challenge that we've got to really understand how we motivate and how we engage and how we engender good, positive habits with customers.
Discussing how behavioral science can inform and aid the creation of digital experiences, inspire brand loyalty, and support brands to create success. Moderated by our CSO, Ross Slight, and a panel of experts, we discussed the key themes that will be vital in the future development of digital products: trust, friction, ethics, and ultimately, the science of understanding people.
But a lot of the challenges we have require a deeper understanding of people. It's just as simple as that. You know, if we're addressing health and finance and sustainability and all of these kinds of things, we're not going to do that with an inadequate understanding of people, and a lot of times.
Understanding customer behaviors and motivations enables brands to gain the competitive advantage. CI&T is an expert in this area, using behavioral science to create impact for businesses, in turn, boosting revenue.
Leading global market research company Forrester Research has positioned CI&T as a leader in the Forrester Wave Modern Application Development Services Q3 2022. The Wave is a well-known guide for buyers considering their purchasing options in a technology marketplace. Forrester analyzed and evaluated significant service providers across criteria related to their current offerings, strategies, and market presence. CI&T received the highest scores in over half of the evaluation categories, including organization structures, talent management, agile development, product development, market approach, partner ecosystems, and DevOps SRE and automation. According to Diego Lo Giudice, Vice President and Principal Analyst at Forrester Research, CI&T is a strong fit for enterprises in industries where digital plays a critical role and those that aspire to succeed with building a digital presence through modern application services. The recognition is a reflection of CI&T's dedication of empowering organizations to maintain competitive innovation in their digital initiatives by enabling the creation of new business capabilities and operational models in a fast-paced market.
Now I invite Bruno to talk about our global talent strategy.
Thank you, Cesar. Good morning, everyone. It's nice to be here once again. Our team keeps expanding globally, and we ended the second quarter of 2022 with more than 6,700 CI&Ters, which represents a net addition of 2,700 employees in the last 12 months, or a 68% growth year over year. And we're proud to be recognized as one of the best companies to promote diversity, equality, and inclusion within our teams by Mais Diversidade Institute, LGBTQI+ Business and Rights Forum, and the Human Rights Campaign Foundation. As we continue to grow and expand, we have a great opportunity to tap into the potential presented by the megatrends of remote work and work from anywhere. We're leveraging the processes and practices we have honed for decades, working in a distributed way to further integrate remote work into our operations and diversify even more our talent pool. We're gradually penetrating new labor markets and are really excited by these initial results. At the same time, we're pioneering innovative ways of team interaction and new forms of infrastructure to continue improving employee engagement in this new environment. Also, acquisitions have been helping in that diversification as well. Throughout this year, the acquisition of Somo has strengthened our footprint in Europe and got us a new delivery center in Colombia. Now, with the addition of Transpire, we will enhance our positioning in Australia and the Asia-Pacific region. Now, I invite Stanley to dive into our quarterly financial results.
Thank you, Bruno, and good morning, everyone. I'm glad to kick off our financial section with solid numbers in our top line. Our net revenue in the second quarter 2022 was 525 million reais, a 66% growth year over year. The acquisitions concluded in 2022 contributed to 13 percentage points of revenue growth in the quarter. Around 50% of our revenue comes from US dollar and British pound denominated revenues. And as the Brazilian real appreciated against these currencies during the quarter, when eliminating the FX variation, our net revenue in constant currency would have been 550 million reais, a 73% increase compared to the second quarter of last year. We continue to diversify our client base with the addition of 17 new clients in the second quarter. This year, we already added 33 new clients to our portfolio that will foster our sustainable growth over the coming years. As Cesar mentioned, our strong revenue growth derives from our expansion within existing clients, the addition of new clients every quarter, and our programmatic M&A strategy. Analyzing our revenue breakdown, you can see in the left-hand chart that we are expanding our global presence. North America continues to be the largest growing market organically for CI&T, and we strengthened our presence in Europe with the acquisition of Somo early this year. Our net revenue by industry verticals remains diversified. It's worth noting that around 84% of our revenue comes from brick-and-mortar companies, and only 16% from startups and digital native companies. In terms of revenue by industry verticals, financial services grew 50% year over year, food and beverage increased 17%, and TMT grew 120% in the first half 2022 compared to the same period of last year. Finally, we reduced our top 1 client's share from 24% in first half 21 to 16% in first half 22, and our top 10 clients' share diminished from 73% in first half 21 to 52% in first half 22. We expect this trend to continue as we onboard new logos and integrate the recent acquisitions. Now, talking about the number of multi-million accounts. We already mentioned the addition of 33 new clients in the first half 2022, pretty much the total amount of new clients added in the full year of 2021. It's worth mentioning that we also increased 5 accounts with more than 20 million reais in annual revenues, totaling 21 accounts. The number of clients with revenue above 5 million and 10 million reais also grew significantly, as you can see in this chart. This is a strongly recurrent business model based on a land and expand strategy, as shown in this cohort. Typically, most of the growth in the upcoming years happens by expanding within current clients, generating an average net revenue retention rate of 120%. But we also ensure the entry of new logos every year, which will mature in 2 or 3 years and guarantee future growth. The result is a year-over-year increase in the client wallet share and an increasing number of multi-million accounts. Moving down the P&L, we ended the quarter with 100.4 million reais in adjusted EBITDA, a 36% growth year-over-year, an EBITDA margin of 19.1%. The cost of services provided grew 66% compared to the second quarter 21, aligned with the increase in revenue and headcount. Thus, the decline in EBITDA margin in a quarter was mainly due to FX headwinds, M&A, as recently acquired companies have lower margins, and higher SG&A expenses. Sales, general, and administrative expenses increased mainly as a result of 3 factors: the expansion of our hiring, attracting, and training teams aligned with our revenue and headcount growth, acquisition-related expenses, including the amortization of intangible assets from acquired companies, and the strengthening of our back-office operation in connection with the IPO. The IPO-related expenses are mainly fixed and should be diluted over time as we expand our revenue base. It's worth mentioning that adjusted EBITDA grew 17% compared to the first quarter 22, and margin improved 160 basis points sequentially due to the higher utilization rate and the price increases that happens throughout the year, as planned and as we mentioned in the previous quarter. In the second quarter 2022, adjusted net profit was 52.3 million, 16% higher than the second quarter 21, equivalent to an adjusted net profit margin of 10%. The reduction in the adjusted net profit margin was mainly due to the higher SG&A and the financial expenses. Net financial expenses was 17.5 million in the second quarter 2022 compared to 2 million in the second quarter 21, mainly due to the debt raised in July 21 to finance the Dextra acquisition in the amount of 650 million, combined with higher interest rates in the second quarter 2022. In May, we paid down 100 million reais in debt with cash proceeds, reducing our gross debt and replaced part of our Brazilian reais denominated debt that carries higher interest rates for dollar denominated debt to reduce the overall cost of debt. Therefore, we expect to see a slight decline in our financial expenses for the coming quarters. We ended the quarter with 358 million in cash, providing us a pretty good liquidity level. I will now pass it back to Cesar to comment on our guidance for the remaining of the year. Cesar, please.
Thank you, Stanley. We remain very confident about the opportunities that lie ahead. Based on current market conditions, we expect our net revenue in the third quarter of 2022 to be at least 540 million reais, a 46% growth year-over-year in a constant currency basis. For the full year of 2022, we are updating our outlook mainly to reflect FX variation in the period. So we expect a net revenue growth of at least 55% year-over-year on a constant currency basis, and revenue growth on a report basis of at least 49%, which includes a negative FX translation impact of approximately 6 percentage points. In addition, we estimate our adjusted EBITDA margin to be at least 19% for the full year of 2022, assuming an average exchange rate of 5.1 Brazilian reais to the US dollar for the full year. That's what we have for now. Thank you all for your trust in CI&T and for attending our call today. We now conclude our presentation and may move to the Q&A session.
We'll now begin the question and answer session. I'll announce each participant's name. Once you hear it, please unmute your line and ask your question. Then, when you're done, please mute your line. The first question comes from Ashwin from Citi. Ashwin, please.
Thank you, Eduardo, and good to see you all. My question is with regards to FX, since I don't think we had the FX impact disclosure for past periods. But could you walk through how FX volatility affects your EBITDA? Is my first question, and then the second part of it is you're mentioning that the updated outlook is mainly to reflect FX. Are there also other factors with regards to cyclical concerns from clients or slower ramps, things like that we are beginning to hear perhaps from other companies?
Thank you. Yeah, Stanley, let me start with the second part, and then I hand to you to the first one. Great to see you, Ashwin. I think regarding the new outlook, I think as you mentioned, the main factor is we adjust for mostly effects, 6 percentage points on this variation. But we also have as you saw, we are still onboarding new clients in a very solid pace. Basically, in 2 quarters, we did the same as the full last year, but the ramp up is for the digital native cohort is slower. So that's represent probably the majority of the 4 percentage points. And regarding past FX impact, I will handle it to Stanley, please.
Hi, Ashwin. Thank you for the question. In a pragmatic way to see how FX affects our EBITDA, you can consider that for each 40 cents in the FX rate, you can foresee a 1% impact or above or down. That's the most programmatic, and this comes from the mix of currencies that we have in top line and in costs. As you may know, 70% of our costs, they are based in Brazilian reais, while around 50% of our revenues comes from hard currencies. So we have a FX leverage this leverage is affected by this 40 cents per 1 percentage point ratio, let's say.
Okay, understood. And then the other question was, I noticed that you're now adjusting out amortization of acquired intangibles. Is that indicative of a very strong M&A pipeline that you feel the need to do that? You've obviously done many tuck-in type acquisitions since the IPO itself. If you could comment.
About the adjustment itself, we felt that we would have to be in line with what the industry is doing. Since the amortization, they have a quite significant impact in our SG&A, so it would be better for everybody to better understand and faster to understand our operation, and that's the main reason for the adjust. With regard to the pipeline, we remain active. As we've been mentioning, we have a programmatic approach to M&A, and we have this as an important tool to speed up our organic growth as we incorporate very focused and programmatic acquisitions.
Thank you.
Thank you, Ashwin. Our next question comes from Diego from Goldman Sachs. Diego, please.
Yes, good morning, everyone. So look, my first question is regarding M&A. You made 3 acquisitions since the IPO. 2 of them seems highly complementary in a geographic standpoint, while Box 1824 looks to bring more, let's say, intelligence specifically for clients in Brazil and Latin. That's my understanding. So I have a couple of questions in here. The first is, how is your current pipeline of M&A at this point, and what should we expect in the next, let's say, 12 months? And also, how do you expect, to fund these transactions and future transactions, right? Specifically, given the market uncertainties, either like on the equity side, on the debt side. So I just want to understand a little bit of your views in there. And lastly, if you can just help us to understand, the cross-sell opportunity specifically for Somo and Transpire. That's the first question. Thank you.
Sure. Thank you, Diego. Great to see you again. I think we have been following this in a very consistent way, our programmatic approach for M&A, looking for expanding our geography reach and also vertical expertise. And this last move with Transpire is in the same pack, right? We now have a good platform for expanding in Australia, one of the largest and good market for digital services, the same size of Brazil. So it's an amazing opportunity for speed up our growth, not only in Australia, but in the Asia Pacific region. Regarding, I think you are right. We continue to foresee and seeing a very strong pipeline for M&A. Now, the main of course, as Stanley mentioned, M&A for us is a way to speed up our organic growth. So now we are focused on, especially on in our pipeline, you can see a lot of opportunities in the USA and in I would say continental Europe, non-UK Europe, where we still have a lot of, I would say, markets that we are not addressing in Europe. So you should expect to see more moves, especially in these 2 geographies. And we are always open for opportunity to strengthen our competence, our skill set, as we did with Box, that I think is an amazing complementary expansion of our strategy set of competence and offering. Regarding funding, I think Stanley could hand that. Please, Stanley.
Okay. Well, thanks, Diego, for the question. We may take some debt because we have plenty of space to use that if we cross with any good opportunity that we couldn't miss, but in a very conservative way. Of course, we are looking closer to the market, waiting for the market conditions for any let's say any movement in the market. Additionally, to offset any debt that we acquire now. So we in a very conservative, as always, we were observing market and observing the opportunities and considering those tools, let's say.
Understood. Thank you both. I guess my second question is more related to the overall business dynamic for your services. Now that we are facing, let's say, a more challenging macroeconomic environment for a few months, are you seeing any indication that demand is slowing or that clients are somewhat postponing their projects? Thank you.
Thank you for your question, Diego. I think as I mentioned, I think for brick and mortar, large global companies, they're continue to invest consistently on digital and technology. What we see, especially in this, I would say, short term, in the 1 or 2 quarters ahead, is a slowdown in the digital natives cohort. I think it's related to the scarcity of funding and of course this macro environment. But so that's why we emphasize that 84% of our business is based on this brick and mortar set of clients, and this cohort is continue to expand in a very consistent way. Yeah, I think that's it, right? Your question.
Yeah, that's perfect.
Yeah, but I think I would add, Diego, that we still see that digital is really considered not only important but urgent. Even in this uncertain times, companies are really improve their bets on the agility of digital initiatives, a way to not only increase opportunities, revenue, and client engagements, but also a way to gain efficiency in their operations. So that's the amazing luck of being part of this industry that is really very resilient to different market and macro conditions.
Makes sense. Thank you.
Thanks, Diego. Our next question comes from Tyler Dupont from Bank of America. Tyler, please go ahead.
Good morning. Thank you for taking the question. I want to start specifically on margin and how we should think about them moving forward. Can you maybe just speak a bit to the strength of your pricing model and perhaps the levers you have at your disposal to either increase pricing or just to manage costs more generally?
Tyler, thank you for the question. Pricing is always depending on the mix of teams, on the technology that we deploy, and we have plenty of space there. As you may know, we are always working with the top line of our clients, and even the market conditions also help us. We are very well positioned in the top tier of value in the value chain for our clients. So we always have opportunities to use new technologies and blend those technologies into our mix and always preserve margins. We also have the freshly new clients entering the portfolio that, again, they play a major role in that mix. So it's always a portfolio management in terms of the pricing with all the existing clients, the growth levers that we have within the clients, and also the new clients coming in.
Perfect. Great. Thank you. Appreciate that. And then also, I know you don't tend to provide specific numbers surrounding attrition and utilization, but maybe if you could just speak more generally to how it's trending versus previous quarters and your internal expectations, and if there's anything specific to call out there.
I think Bruno, could you handle that?
I'm sorry, could you come again, Tyler?
The question was with regard to attrition, if
well, attrition
utilization rate.
Attrition continue at very low levels comparatively to the industry. Our overall attrition is around 16%. And another attrition number that we follow even more closely is actually the leadership attrition, which is actually the big bottleneck for growth for us, and actually that's most important in terms of quality of our services and consistency of our services. And that's even lower. It's around 6%. So it's very comfortable levels. And what we see in the industry is, I think it continues to be a very hot market, but it's probably the less hot that's been in the last 12 to 18 months. So which is good news for us.
Perfect, Bill. I appreciate the color. Thank you.
We have a question here. Thank you, Tyler. We now have a question here via email from Pune, from JP Morgan. Can you break down components of EBITDA margin deterioration from 20 to 19% guided into FX, SG&A investments, and new M&A impact? Are you seeing any adverse impact from macro uncertainty on client spending, or have their spending priorities changed at all over the last 3 months?
Okay, well, I'll start with the first part, and Cesar, you handle the second, please. With regard to the EBITDA breakdown, FX plays a major role. As I mentioned, we have this leverage, reais dollar, and as you saw, we had an affectation in gross margin with regard to this leverage. But M&A also is relevant, as we have increased our expenditures with the activity. And of course, SG&A investments. As we became public, we had to invest in our back office structure. So we have a consultancy, we have stronger teams, we have a higher D&O insurance. So the whole package, I would say, starting with FX, that plays a major impact, but in that order. Yeah.
Just to add here, in terms of those impacts, we have those investments in SG&A, you expect them to be diluted over time. So they're mainly fixed expense when you think about back office operations. So that should contribute to our operating leverage for next years. And M&A impact, I mean, as usually the companies we acquire have lower margins, so it's natural to have an impact on that side, but that's something that we also expect to improve those margins going forward, to bring that to CI&T level, so that overall we can also increase EBITDA margin for the consolidated company.
Thank you. Let me add regarding the client behavior or spending pattern. We see our clients looking for really initiatives that will generate results in, I would say, more short cycles, and that resonate a lot with CI&T value proposition of combining strategy, design, and engineer in a way that we can really foster results in very short times, typically 9 days. I think that's why we see this environment as an amazing opportunity to continue to grow higher than the industry, much higher than the industry, and it's an opportunity to increase our market share. And I think we are very well positioned to continue to do so.
Thank you, Cesar. We have a follow-up question from Diego from Goldman Sachs. Diego, please. Diego, any follow-up on your side? Maybe you're just with your hand raised. Let me move on here for some questions we got via email. The first one is regarding the integration of the acquired companies. Can you please provide color on the status of the integration process of your recent acquisitions?
Sure. We can take this one. Dextra has been, the integration of Dextra has been completed by December last year. So we're considering, business as usual, completely integrated. The business has been reorganized around 4 growth units, and it's completely seamlessly integrated at this point. Somo, we started integration in this first half of 2022. We expect to be fully integrated in 2023. But its integration is going really well. Like, we're collaborating already around some global accounts, and that's part of actually the question Diego asked, right? So what do we expect from those in terms of cross sale from those acquisitions is actually those global accounts that Transpire or Somo have, in CI&T, right? So we use those new geographies to actually support our global clients, those geographies and their global accounts to be supported in the geographies that we already have presence. So that's a kind of clear opportunity there for cross-sale. That's what we're doing with Somo and we'll do with Transpire going forward.
Bruno, let me take these questions to mention that we see really our platform, our entrepreneur platform, the way CI&T is organized around 26 growth units. It's helping a lot, not only in our aggressive organic growth, but also in allow us to provide a very strong value proposition for founder-led companies, our target companies. And also it's been an amazing way to integrate these new companies to CI&T global platform and leverage the synergies and the market capabilities. We are counting on this entrepreneur organization model to continue to combine an aggressive organic strategy with our programmatic M&A strategy.
We have a follow-up question from Ashwin from Citi. Ashwin, go ahead.
Yeah, thank you. The follow-up is on M&A. And you've mentioned, of course, a few times the programmatic approach. Are you backtesting, the results of past M&A? I mean, for example, relative to your initial expectation, how is Dexter doing? How is Somo doing? If you could comment a little bit on that, what gives you confidence to keep doing the programmatic M&A?
Great, thank you, Ashwin. I think the main initial purpose is priority is keep the growing. We are acquiring high growth companies, and the first indicator as this company onboard CI&T platform, they continue to grow in the way they were doing before. And then over time, we have two priorities. One is cross sales opportunities that in both way, adding CI&T global capabilities, nearshore capabilities to their operations that also drives margin improvements, and also leverage their global clients in different geographies or business units. So I would say that Dexter was an amazing, as Bruno mentioned, amazing storyline. As Bruno mentioned, from August last year to November, it was fully integrated, and the 4 new growth units continue to grow at the same pace as CI&T. I think Somo follow the same pattern. Box is a different animal. Is a strategy boutique that we are now integrating with the whole CI&T end-to-end portfolio. Initial good signs, but it's too early to have a concrete learning from this. And Transpire will be our next move. By the way, Transpire is not included in our guidance. We will do that as soon as we close the operation. We have the closing date of the operation.
Just to clarify, when is the closing date?
We expect in this third quarter.
Okay.
That's our expectation right now.
Okay, thank you.
All right, thank you, Ashwin. We have also a follow-up from Tyler Dupont from Bank of America. Tyler.
Great, thank you. I promise I'll be quick. Just to follow on that M&A front, and particularly the growth rate in Europe, it looks like a significant portion of that comes from the Somo acquisition, if I'm not mistaken. Can you just clarify how much of the European growth is attributable to recent acquisitions versus just traditional organic?
Well, if I got it right, the question is how much of the growth is attributed to the acquisition itself. Is that correct, Taylor?
Correct. Yeah.
Yeah.
The growth in Europe.
Yeah. Specifically in Europe.
Yeah, Bruno can handle that, but really our operation in Europe was very small, and now the platform is basically Somo clients expanding and new clients we acquired, and we combine with CI&T in a new growth unit. So, but you want to add more colors on that, Bruno?
I would say 80%, around 80, right, would come from the acquisition part.
Mostly.
Yeah, another way to look at that, Tyler, our revenue in Europe pre-acquisition was about 3% of total sales. So now this 9% is mainly due to the acquisition.
Okay, perfect. Well, thank you again.
Thanks, Tyler. So that concludes our Q&A session. Thank you all for attending our event today. I'll now invite Cesar Gon to proceed with his final remarks. Cesar.
Thank you, Eduardo, Stanley, and Bruno for joining me today. Thank you all for participating in our call again. I want to thank you all CI&Ters for the amazing impact we are delivering as a team, and client investors and partners for the continued support. Stay well. I'm looking forward to see you in a couple of months. Bye.
Thank you.
Thank you all.